All right, fellow AMC ape holders, XMAX Trading here. Just been bringing some more AMC FUD by Yahoo News. It's about a month ago. Why AMC stock can't squeeze like GameStop. The world's largest cinema operator, AMC. Oh, AMC is the world's largest cinema. That's pretty good. Stock has been on a terror resurgence of meme stock squeeze continues, but is no GameStop. It appears AMC and GameStop have decoupled in the near term as Reddit traders are favoring AMC. This is back in June. While GameStop continues to bleed and attempts to find a bottom after its less than impressive Q1 2020 earnings results, AMC continues to maintain elevated levels of volume despite monstrous dilution taking place. No, not because we voted against further dilution. While GameStop's recent rebound has created a new template for meme stocks being more than one-shot wonders. GameStop's rebound more than one-shot wonder. The notion that AMC will short squeeze as GameStop did in January 2021 is very likely not mechanically feasible. Here's why AMC can't squeeze like GME. AMC versus GameStop. AMC is the world's largest cinema, but it's completely decoupled from peer stocks like Cinemark and IMAX. Instead, it has taken a life of its own, having raised its average trading volume in excess of 100 million shares a day, while some days hitting over 500 million shares. Additionally, the company has finally utilized the heavy liquidity to raise cash at the market offerings, including $1.2 billion in May and June alone. The float has risen 500% year over year to nearly 500 million shares, and a possible 20% short interest. That short interest is kind of telling because it's like, when it gets really high, it's like they could bust the shorts will bust themselves up. Average volume has risen to nearly 150 million shares a day. The CEO of AMC, Adam Aron, has paid attention to retail investors and traders and made himself available to almost a ridiculous pandering level where he had a webcam Zoom call with YouTuber, traders trade, trying to give him that the tool for AMC was more dilution. This is kind of old, but the fact that they're really angry with him, with Adam Aron talking to Traders Trade is kind of funny. Obviously, this article's biased. He actually knocked over his webcam, only to reveal he wasn't wearing pants while wearing a dress shirt and tie. For an interview, many Redditors were convinced this message was against the shorts, but in reality, it shows how shallow his respect for the little guy truly is, just by offering free popcorn for shareholders. That's BS. This article is so much FUD. He's a bit too transparent, and pondering to the retail investors is a dangerous path. Screw you, Yahoo. The biggest problems is the dilution factor. Our CEO planning too much to be transparent. GameStop, on the other hand, has a mere 58 million share float, 69 million shares outstanding, and 17% short interest. In a cryptic management that doesn't cater to retail investors, not as much compared to AMC. In fact, GameStop has a new CEO coming from Amazon. Lack of transparency feeds speculation, potential squeezes, and outcomes. By taking away the hopium, AMC does not do any favors for itself and shareholders. Here's the opportunity to pull back for seasonal traders only. AMC weekly rifle units have highly speculative trades. Opportunistic pullbacks at level 41, 37, 35, 25, and 20. So they even say you can make there could be opportunistic pullback in AMC for it to go back up. It's kind of weird. Looking like stochastic. Using the rifle charts on the weekly, daily, provide a broader view of AMC and GME. The weekly rifle charts are surprisingly correlated, despite the big divergence in the daily charts for AMC and GME. This time, it appears that AMC is finally rising to the occasion as GME is a laggard. Both AMC and GME have weekly pup breakouts, rising stochastic and form mini pups. GME needs work on the 5-period moving average. It sits near their $218 fib. If shares can rise above $218, then the weekly stochastic can form a mini pup towards a weekly upper Bollinger Band of 321 Fibonacci levels. Worth noting that weekly BBs are in comparison. AMC, on the other hand, is a weekly BB exceeds 57.53. If shares fall back to the weekly upper BBs, the channel will tighten up at 5-period. So they're making it only seasoned and nimble traders should even consider trade AMC or GME. Here are opportunistic pullbacks for GME at the fib levels, AMC the fib levels 37. Opportunistic pullbacks for AMC at the 41.25 fib, 37.fib stinky, 2.50s range, 25.fib range, 21. What is this stinky? What are these people doing? Keep track of your allocations. Stick to short-term maintenance swings. Selling puts at these levels is another strategy to collect income as long as you're willing to be assigned. Not financial advice. Man, this comment Ape sell. Ape buy and hold. AMC to the moon. All these FUD articles, FTD FUD delivery, they fear what they intended. Why apes hold? Simple. They like the stock. Ape have no understanding of meaning ape hodl. Ape buy more. So yeah, FUD article.